Financially Free D here, and in the spirit of New Year, New Me 2023, we are all becoming financially free. And we are starting this off with the foundation, which is personal credit. And for today, we are going to give a little lesson on understanding the different types of credit that is available to you, why you should use them, how you should use them, and how they can become a tool and or a resource to level up in the credit journey. So if this is something that you are interested in, something that you are following, if you are following the personal credit series here, I suggest you tune in because we are going to get into the different types of credit and how you can use them so that they can be beneficial to you. So we have several different types of credit that are used on the personal side, and I'm going to kind of explain to you what they are and how you use them. So first things first, we have credit cards. We all know what credit cards are. If you do not know, there's a difference between a debit card and a credit card. A debit card is money that you are using from your actual cash or your bank checking account in your bank versus a credit card where you are using other people's money. So this is the bank lending or the lenders lending money to you, and you are then paying it back to them. Debit card, you are using your own money. So credit cards, we won't go too far into that, but credit cards is the first type of credit that most people have experience with. So the beauty about credit cards are, one, you can get some lower interest rates. Two, you can sometimes do 0% interest, which the other types of credit products do not allow you to do that. So I use 0% interest business credit cards. I am the queen of that. I love that. It's the best money you can ever get, and I recommend you to do so too. But we're talking about the personal credit side. So yes, they do have personal credit cards that you can do 0% interest as well. So that's a benefit to a credit card. Another benefit to a credit card is you can get rewards, which is my second favorite thing about credit cards. So I tend to use my credit cards for travel. So that would be flights, that would be hotels, that would be rental cars. I even used it to get my global entry and my TSA. So there's so many rewards that come with credit cards. And if you get the right types of cards, your cards end up paying you. Like I have cards that actually give me cash in my checking account. I have cards that give me statement credits, give me discounts, give me all types of free things. So credit cards are it for me. So that is the pros of credit cards. Now the cons of credit cards is, one, you can sometimes get an extremely high interest rate. So for example, if you get a credit card that typically has a lower introductory rate, so 0%, 1%, 3%, they usually have a very high interest rate on the back end. So 25%, 28%, 20%, very, very high interest rates. And that 20% can add up. So you really want to be mindful of those interest rates, especially when you're taking the introductory rate that's low up front. Another thing about credit cards that could be a con for you is you're spending a bunch of money that you do not have, and you typically have easier access to a credit card versus some of the other credit products. So a lot of people, they've gotten into really bad debt, including myself, and they max out these credit cards, super high utilization, and it then actually makes your personal credit score really, really, really bad. It will lower your personal credit score by a lot of points. So those are two cons that come with credit cards. Another credit product is a mortgage. And a mortgage is used for the purchase of a home or a property, whether that is a primary home or it is a investment and or rental home. You can use this mortgage. Mortgages give you the largest amount of money typically when it comes to the credit products. So you have people who have $1 million mortgages, and they also give you the longest term investment. So you can get a 30-year mortgage. There's actually even 40-year mortgages right now. So none of the other credit products will allow you to pay for that long period of time. So that is a great product to use if you are using something that is a long-term investment, or if it's a forever home. A mortgage is a great product to use. Now, the con is that you can sometimes be locked into these longer terms, which gives you higher interest rates. So the longer the term, the higher the interest rate. The shorter the term, usually the shorter the interest rate. So some people do these things where they get themselves into more than what they can afford because they're allowed so much. So for example, you'll have a person who qualifies for $1 million mortgage, but they can really only $400,000. So a lot of people get themselves into very bad debt because they become what is called house poor, meaning their home takes up all of their money. So a good rule of thumb is they say do not have a home that's more than 35% of your income. I would say less, but 35%. So that way you are not house poor. Another type of loan or credit product, I should say, is an auto loan. So an auto loan is exactly what it sounds like. It is a loan to purchase a car, a truck, a van, any type of vehicle via a loan. So one thing about auto loans is it's the second easiest type of credit that you can essentially get. So it's usually credit cards, and people usually get auto loans when they're young. And so one of the pros is it provides a vehicle. So it provides you a way of getting around, getting to and from work, to and from school, to and from picking up your children, or it actually provides you a way to make additional income. So if you use apps like Turo, or you use, you loan your car to other tourists. If you live in a vacationing town, some people rent their cars out to tourists. Another way that it can provide income for you is if you are someone who does lawn care, or you're doing moving, you can use this van or truck as a way to make money. So that is a pro. Anytime you're using an auto loan to make money, I say that is thumbs up. Now, the con with an auto loan, as soon as you buy this vehicle, it's depreciating by 30%. So as soon as you drive off the lot and it's a brand new vehicle, it has depreciated, meaning it is not worth what you just bought it for. So unless you have a car that appreciates in value over time, becomes a classic car, but typically the rule of thumb is the car is going to depreciate as soon as you buy it if it is a new car. So you essentially lose money from the start. And just like with the mortgage, if you buy a car that is more expensive than you can actually afford, and your personal credit score is poor, your monthly payments are going to be extremely high. There's people that I know that pay $1,500, $2,000 for their car, when that is more than a home payment for or mortgage payment for some people. So people typically, just like with a home, with their cars, they buy it off more than they can chew. And the thing with a car, another con is a lender can easily repossess a vehicle. So unlike a home, it's harder to foreclose on a mortgage. But a car, they will just come and get it. And trust me, when you are getting an auto loan, they get references to find not just you, but whoever is connected to you to come and get that car. So if you cannot pay for the car, now you have a repo on your credit, and you now have bad credit. So you need to be very mindful of that. Now, the next type of credit is personal loans. And so personal loans can come in various different ways. Literally, you can call up the bank and say, hey, I need a personal loan because I'm going on vacation. Or, hey, I need a personal loan because I'm moving out of town. I need a personal loan because I need to repair some things, in my home or in my whatever you have going on. Personal loans are the most flexible. So that is the pro about personal loans. They are the most flexible way to borrow money. Essentially, they do not have to be connected to a hard asset. So with a mortgage and with an auto loan, you have to have a physical asset that this money is going towards. With a personal loan, you can get it for whatever reason you like, essentially. So personal loans, that is the pro. I actually love personal loans. I have used personal loan, bank-backed personal loans. Let's make this very clear. I love bank-backed personal loans. Consumer loans are different. Consumer loans, one, don't look as good on your credit, and two, they have higher interest rates. So a place like Upstart is a consumer loan. So you want to get bank-backed loans. So Navy Federal, other banks, community banks, big banks, you want to get bank-backed loans because they have lower interest rates and they have better terms. So that is a pro of using a personal loan. Now, a con is they have high interest rates, typically if it is a consumer loan or you have poor personal credit. If you have poor personal credit, you can have extremely high interest rates for personal loans. And also, you need to be very mindful of the terms that comes with a personal loan, because if you have a consumer-backed personal loan, you're typically going to have an origination fee. So origination fee is a fee that you pay for actually obtaining or receiving the loan. So you don't actually get this money in your pocket. The lender actually keeps it like a deposit. That's what an origination fee is. It's a deposit. So let's say you get a loan for $20,000. They may keep $2,000 as an origination fee. And then you only get $18,000, but you're going to owe interest on $20,000. I'm going to say that to you again. You can get a personal loan from a consumer lender who gives you an origination fee of $2,000 for a loan that's $20,000. You only receive $18,000, but you are paying interest on the full $20,000. To two of those $1,000 you never received. So you need to be very, very, very mindful of using consumer loans. Now, these are all great products if used properly. Like I said, each one of them can be beneficial. A credit card can be beneficial if you learn to invest with it. A mortgage can be beneficial if you learn to turn your property into a cash flowing asset. Your auto loan could do the same for a vehicle that's actually supporting your business or supporting, your day-to-day life. A personal loan can allow you the flexibility of cash flow, so that way you're not stressed about how you're going to pay certain things. So it is so many other different types of loans that fall underneath each of these big categories. Also, I would like to give another special mention of types of credit. There are certain things called lines of credit. So there's personal lines of credit that you can also use. And you use those kind of like a checking account in a sense, but you pay interest on them. So, for example, I have a personal line of credit with Navy Federal. So let's say that that's $5,000. So essentially, I have $5,000 available to me at any given point in time, cash money that I can use. But as soon as I take that money, I begin paying interest on it. Lines of credit are typically used for short-term periods of time. You don't want to use lines of credit for very, very long periods of time. You rather use an installment loan versus, a line of credit. So we'll get into strategy of how to use these different types of credit, but I did want to make mention of lines of credit because that is another type of credit. You got home equity lines of credit, you got personal lines of credit, you have business lines of credit, you have several different lines of credit that you can possibly use as a credit resource to you. But I wanted to explain to you what these different types of credit are, how you can use them as a resource, but also know the downsides and the cons of using these credit tools to level up. So, you guys, if you love videos like this and you want to hear more from me about these types of personal credit options, please put it down in the comments below. Make sure you like the video. Make sure you subscribe. Make sure that you click that notification bell. And make sure you share these videos with people who are trying to level up and become financially free in 2023 as well. And guess what, guys? I have created an entire playlist on just personal credit. We're talking about personal credit strategies. We're talking about how to fix your personal credit, how to go to bad credit, from bad credit to good credit, how to get personal credit cards, loans. We're going to talk about all of this for the first quarter of this year. So if you have any topics that you like for me to cover, please put that in the comments and check out these other videos in the playlist. I am putting this in the card right here. Also, the link down below in the description box. Be sure to tune in because we're on the journey to become financially free in 2023.